The S&P 500 is down today by around 0.38%, even after Jerome Powell and the Federal Reserve decided to go and cut interest rates by around 0.25%, or 25 basis points, making it the first cut the Federal Reserve have made this year, which now brings lending rates to around 4 to 4.25%. Now, usually when interest rates are cut, it's good for the market and it stimulates economic growth, which means you would think that the S&P 500 would go up. Now, the reason it's actually gone down slightly is because we've known for the past 2 weeks now that the Fed are going to cut interest rates, or at least it's been like a 90% chance of happening. So a lot of this was already priced into the market, and that's why the market's gone up so much the past couple of weeks. But we have more positive news coming to the stock market in the short term, with the Fed expected to make 2 more interest rate cuts of 0.25% before the end of the year. Now, if you would like to get started on your own investing journey and sign up to Trading 2 and 2, which is the investing platform I use myself, and deposit just £1, you will receive a free share worth up to 100. But this limited time offer is only available to the first 5 people who sign up using my link, so if you are interested, make sure you're quick. The Federal Reserve have been hesitant about cutting interest rates simply because they don't want to reignite inflation again. But during this period, the President of the United States, Donald Trump, has spoken very negatively about the Chairman of the Fed, Jerome Powell, saying that he has left it too late. Now, a couple of weeks back, we had the Labour report for the United States of America, which basically tells you how strong the job economy is. And it was reported that they only added 20,000 new jobs in August, which was a lot lower than estimated. And unemployment grew from 4.2% to 4.3%. Not only do we have a weakening job market, inflation is on the rise again, rising to around 2.9%, which is the highest it's been since January, after it held steady at around 2.7% in June and July. And a lot of people are putting this down to Donald Trump's tariffs that is implemented. Now, the reason interest rates actually help to stimulate the economy is because it allows for cheaper borrowing costs, which means both businesses and consumers can borrow at lower costs. People are more inclined to take money out of their savings account because the interest they earn will go down, and they will look elsewhere to receive a higher return and put it into things such as stocks, which has hopefully increased the overall stock market and individual stocks. But at the same time, this makes assets more expensive. And of course, it means that people who have already existing debt will also be able to pay less interest on that debt that they have, which means they should have more disposable income to spend. So I think overall interest rate cuts are very positive for the stock market, but we've got to be careful that inflation doesn't reignite again, especially if they cut interest rates too quickly. If you found this video useful and want to see more finance videos like this, make sure to follow my page and double tap the screen.